All right, so we're doing a deep dive today into financial structuring.
Ooh, sounds complicated.
You might think that, right? Like something only Wall Street people need to know?
Yeah.
But honestly, it affects way more than you'd think. Even if you're not, rolling in dough,
Okay.
whether you're like prepping for some big business meeting or saw some jargon in the news or just want to, boost your business knowledge, this deep dive is going to give you some serious insight.
Nice.
We're going to break down this document. We have all about it. And with help from our expert here, we'll pull out the juiciest parts
It's good.
and leave you with tons of aha moments. So you can be like the most knowledgeable person in the room, right?
Uh-huh.
But speaking of our expert, why don't you introduce yourself?
Well, let's just say I spend a lot of time thinking about how businesses use their money to, reach their goals.
Okay, I like that.
And financial structuring. It's kind of like their secret code for doing just that.
Ooh, secret code. Love it.
Yeah.
But for those of us who aren't like financial wizards, what is financial structuring exactly? The document mentions it's about organizing finances.
Right.
But can you paint us a clearer picture?
Sure. Imagine you're building like a giant skyscraper.
Okay.
You wouldn't just start stacking floors randomly, right? You'd need a blueprint, a solid one.
Makes sense.
One that maps out the foundation, the materials, how the weight's distributed. Financial structuring that's kind of like that blueprint. But for a company's money,
Oh, I see.
it's how they decide the best way to raise money, to manage risk, to basically just, set themselves up for success, whatever that looks like for them.
So it's not just about having the money, it's about how you use it strategically.
Exactly.
Now, this document we have, it gets into some key parts of financial structuring.
Yeah.
One that pops out is the whole debt versus equity thing.
Ah, yeah.
It's something we hear all the time, but can you break it down for us? Like, when would a company go for debt and when would they choose equity?
It boils down to their goals, really, and their risk tolerance. Debt, think of it like taking out a loan, right?
Okay.
It's a good way to get cash fast for things like, if you want to expand.
Mm-hmm.
But there's that obligation to pay it back with interest.
Right.
So it might be cheaper up front, but riskier long term,
Mm-hmm.
especially if, things go wrong.
Yeah, for sure.
Now, equity, it's more like inviting investors to become part owners in the company. They give you money, but in return, they get a slice of the pie.
So debt is like borrowing from a friend, and equity is bringing in a business partner.
Exactly. Both can help you grow, but yeah, there are trade-offs.
Trade-offs, for sure.
Yeah.
And I guess the right mix depends.
Yeah, there's no one size fits all.
It's got to tailor to the specific company, right?
Right. And what's really interesting is that there are also things called hybrid instruments.
Okay.
And these kind of blur the lines between debt and equity.
Ooh, hybrid instruments, fancy. The document does mention something called convertible bonds, but I got to admit, I'm a little lost on that one.
Oh. Think of it like this. A convertible bond, it starts out as debt. So the company borrows money and promises to pay it back with interest, right?
Yeah.
But here's the kicker. Under certain conditions, this bond can transform into shares of the company.
Wait, really?
So for investors, it's like having the safety of debt, but also the chance to own part of the company if it takes off.
So it's like a 2-for-1 deal, but with, a little financial magic sprinkled in.
Uh-huh. Yeah, you could say that.
I'm starting to see how this can get pretty complex.
Oh, yeah.
And the document also mentioned tax optimization as part of this.
Yeah.
Is that what I think it is?
Exactly.
Companies trying to be, shall we say, strategic with their taxes?
That's a bit of a loaded term.
Yeah.
What we're talking about is companies using legal, ethical ways to structure their finances to, minimize their taxes.
Yep.
It's not dodging taxes. It's understanding the rules and using them to their advantage.
So it's like a game of financial chess,
Yeah.
making smart moves to reach their goals.
Exactly.
And those goals, they could be all over the place, huh?
That's right.
Which is what makes financial structuring so interesting. So let's talk about those goals. Why do companies bother with all this financial maneuvering? What are they trying to achieve?
Well, it's like this companies, they have goals, right?
Yeah, like ambitions.
Just like people do.
Right.
They might want to, expand, launch some amazing new product.
Sure.
Maybe buy out a competitor, or even just survive if things are rough financially,
Yeah.
And financial structuring, it helps them figure out the best way to use their money to actually do all that.
So it's like their financial toolbox
Yeah, you could say that.
to achieve whatever they're aiming for.
Exactly. Let's say a company wants to get into a new market.
Okay.
They're going to need cash. to build stuff, hire people, all that.
Mm-hmm.
Financial structuring helps them decide loans, bonds, sell shares. It all depends.
Their finance.
Their finances now, how much risk they're okay with, their long-term goals. It's a lot to consider.
Just like a balancing act.
Oh, it is. And it's not just about expanding either. Sometimes companies have to, like, restructure their finances
To do what?
to be more efficient, cut costs, or handle a tough economy,
Like a financial makeover.
Yeah, exactly. Streamlining things, making their money work better.
And sometimes it could be even more serious. Yeah.
You mean like when a company's in trouble?
Yeah, the document mentioned that.
Right, right. In those cases, financial structuring can be a lifesaver.
Really?
They might have to rework their debts, sell stuff off, maybe even merge with another company to stay afloat.
Wow.
It's like the financial ER,
I get it.
experts come in, stabilize things, find a way to recover.
So we've got growth, we've got makeovers, we've got emergencies. Financial structuring really covers it all.
It's pretty versatile, that's for sure.
And the document also talks about project financing.
Oh, yeah, that's a whole other beast.
That's for huge EE projects, right?
Huge. Think like building a bridge, a power plant, a whole city even.
Those need insane amounts of money.
Oh, tons of it.
From all sorts of places, I bet.
Multiple sources, yeah. Governments, private investors, you name it.
So how do you even structure something that massive?
It is complex, but the idea is the same. Create a framework that's specific to that project.
Okay,
One that lays out who takes on what risk, who gets what reward.
got it.
So it's got a solid foundation financially and a clear path to actually get finished.
It's like building a whole financial ecosystem.
That's a good way to put it. And the creativity involved is amazing,
Really?
You've got all these different players, each with their own agenda and risk tolerance.
Right.
Financial structuring brings them together, makes sure everyone's on the same page so the project can move forward.
Fascinating. Now, something else that came up in the document was hedging instruments as a way to manage risk.
Ah, yes. Hedging.
Can we dive into that a bit? It sounds kind of like financial sorcery to me.
It's not that mysterious, really. Hedging is basically using these financial tools to protect yourself from potential losses.
Losses from what?
Things that change all the time. Interest rates, exchange rates, commodity prices, that sort of thing.
So it's like insurance for your finances.
You could say that. Say a company imports stuff from another country.
Okay.
They might use a currency hedge.
What's that?
It protects them if that currency suddenly becomes more expensive.
Which would make their imports more expensive.
Exactly. So hedging helps minimize risk and, makes things more predictable.
In a world that's anything but predictable, yeah.
Right. And that's just one example. There are tons of tools and strategies companies use in financial structuring.
Like what?
Derivatives, swaps, options, it's a whole toolbox.
Wow, a whole arsenal.
But with all that complexity, there's got to be some downsides, right?
Yeah, there's no way it's all smooth sailing.
You're right. Financial structuring, it's powerful, but it's not without risk.
Like what?
Well, one big one is market volatility.
Meaning?
Things change fast in the financial world. Unexpected stuff happens, and that can mess up even the most well-planned structure.
So it's like building a house on shifting sand.
In a way, yeah. Companies got to be flexible, ready to adapt as the market changes.
Makes sense.
Another challenge is all the regulations. They're different everywhere, and they change all the time.
So it's like navigating a maze, but the walls are moving.
Good analogy. And then there's the human factor.
Yeah.
This stuff requires real expertise. You need the right people making decisions, or it can have big consequences.
So best to leave it to the pros.
In most cases, yeah. Especially for complex deals or high-stakes situations. But that doesn't mean you shouldn't try to understand the basics.
A good point.
Even a little knowledge can help you make better decisions.
Whether you're running a business, investing, or just trying to follow the financial news.
Exactly.
Now, the document also mentioned something about aligning financial structuring with a company's overall goals.
Oh, that's crucial.
Could you explain that a bit?
Sure. It's like this. You can't just do financial structuring in a bubble. It's got to fit with the company's big picture. What are they trying to achieve in the long run? How much growth do they want? How much risk are they comfortable with?
It's like making sure the financial plan matches the company's roadmap, right?
Yeah, exactly. If a company wants to grow fast through acquisitions,
Meaning buying other companies.
yeah, then their financial structure needs to support that. Give them the money and flexibility to make those acquisitions.
Makes sense.
But a company that's more focused on slow and steady growth, they might want a structure that prioritizes stability and minimizing risk.
So different goals, different approaches.
Absolutely. You wouldn't want a race car engine in a minivan.
Uh-huh. Right. It's got to be the right fit.
And it's not a one-time thing either.
What do you mean?
As the company changes, their financial structure has to change too.
So it's constantly evolving.
Right. The business world is never static. Companies have to be able to adapt.
We've covered a lot here, from the basics of financial structuring
Yeah.
to how it's used in all sorts of scenarios.
It's a wide-ranging topic, that's for sure.
What are the key takeaways you want our listener to remember?
Well, the main thing is this financial structuring. It's not just for the finance experts.
Okay.
It's fundamental to how businesses work, how they reach their goals. Understanding the basics can really help you make better decisions.
Even if you're not a financial expert, you're saying?
Right. Whether you're running a business, investing, or just trying to understand what's happening in the financial world.
Makes sense. Sounds like there's a lot more to learn about this.
Oh, there's always more to learn.
Where can our listeners go to dig deeper, get into the nitty-gritty of financial structuring?
Tons of resources out there. Online, in libraries.
Okay.
Start by looking up specific topics that interest you, see what you find.
Like what?
Articles, books, even online courses that get into the technical details.
Oh.
And if you're really serious, you can always talk to a financial advisor or someone who specializes in corporate finance.
So there's expert help available too.
Definitely.
Great advice. I have one final question for you. We've talked about all the technical stuff, how companies use financial structuring,
Right.
but what about the ethics of it all?
That's an important point. Like, any tool, financial structuring can be used in good ways and bad ways.
Right.
It's crucial to make sure these financial decisions are made ethically, transparently.
So it's not just about making the most money possible.
No, it's about being responsible.
Creating value for everyone involved, not just the shareholders.
Exactly. Financial structuring should benefit everyone, not just a select few.
Really good point. I think that's a great place to wrap up our deep dive into financial structuring. Feels like we just dipped our toes in the water here.
It really, a vast topic.
And always changing too, right?
Absolutely.
But I think we gave our listener a good starting point.
Yeah, definitely. We went from, like, what did I ask, to why companies do it, to some of the tools they use.
And the challenges too.
Oh, for sure. There are always challenges.
We've talked about debt and equity,
The big two.
how finding that right balance is so important for a company to succeed.
It's crucial, yeah. And then there are those hybrid instruments.
The convertible bonds, those are
Yeah.
pretty wild.
Blending debt and equity. It's a whole other level.
Almost like financial alchemy.
Uh-huh. Yeah, kind of.
We also saw how financial structuring is involved in so much,
More than people realize, I think.
from how companies run day to day to huge projects, even rescuing companies in trouble.
Right. It's a very versatile tool.
But as we learned, it's not without risks.
Definitely not.
Volatile markets, complicated regulations, needing experts to handle it all.
All things to consider, for sure.
And something you really emphasized was the ethical side of things.
Yeah, that's important to me.
It's not just about making as much money as possible.
Right. It's about responsibility, too. Making sure these financial decisions are ethical, transparent.
So as we wrap up this deep dive, what's the one thing you want our listener to remember?
That financial structuring, even though it seems complex, it's really about making good choices to reach financial goals. It's like solving a puzzle.
A financial puzzle.
Yeah, where all the pieces have to fit just right.
To build something strong and successful.
Exactly.
And just like with puzzles, it takes practice,
Oh, yeah.
strategy, and a little creativity, I bet.
Absolutely.
We give a good overview here, but I know there's way more to learn.
So much more, yeah.
Where should our listener go if they want to keep digging into this?
There's a lot online and in libraries. Start by picking a specific topic that interests you and see what you can find.
Good advice.
Look for articles, books. There are even online courses that get into the details.
Yeah, for sure. And if you need more guidance, you can always talk to a financial advisor or someone who specializes in this stuff.
So there's expert help out there too, if needed.
Absolutely. Don't be afraid to ask for help.
Great. Well, I think we've given our listeners a lot to think about today.
I hope so.
And with that, we'll wrap up our deep dive into the fascinating world of financial structuring.
It's been fun. Thanks for having me. Thanks for joining us. And to all our listeners, until next time, keep learning, keep exploring, and keep diving deep.